Three major analyst firms issued a warning that SMCI might be delisted from Nasdaq. One of them believes that the company has a significant risk of defaulting on their loan with Bank of America after shares of SMCI or SuperMicro computer crashed on Wednesday morning, falling over 30% after accounting firm Ernst & Young or EY has resigned from its relationship with the tech company. Together with this, SMCI announced a release of business update next week, but together with this, they said that it won't be a full financial report. Today, we will break down all of the uncertainties around SMCI stock together with the news about all of these accounting issues. But on the other side, we will also speak about some optimistic forecasts of the people and analysts that are looking only at their numbers. In the end, we will also speak about whether you should get out of this investment right now or maybe there are a chance for a rebound. Hi there and welcome to the Market Monkeys channel. It's Julia here and today I want to begin straight from the news. SuperMicro Computer or SMCI was scheduled to report their quarterly results this Wednesday, October 30th, although this date wasn't confirmed and it was more than likely that this report won't see the light on Wednesday, or at least I didn't expect it to. When the Hindenburg report came out, it was in the end of August. The company has been accused of fraud in reporting their financial reports, and on this news their stock dropped only about 3%. But the next day, when the company announced that they won't make their 10K filing on time, the stock of the company dropped almost by 30%. At Wednesday's market open, we got the news that EY, or accounting firm of SMCI, is leaving them, which is a very bad sign. But let's start to reveal everything that happened step by step. The fact that SMCI faces Nasdaq non-compliance makes me think the stock isn't worth the risk. The delaying filing of SMCI's 2024 annual report is a significant fundamental weakness, and the fact that the company has admitted needing more time for this accounting review, and another fact that it actually takes them so long, should make you really nervous. After all, a legit question is, if everything is okay with the numbers, why does it take more than 2 months to review them? And another question is what they're trying to fix for so long. The company is approximately 10 weeks behind reporting their annual report that was due in the end of the August. As we already mentioned, as a response of this delay, SMCI got a non-compliance notice from Nasdaq on September 17, 2024, threatening their listing on the exchange if it fails to comply within 60 to 180 days. By the way, for those of you who didn't know, it's not the first time that something similar happens to SMCI. They already once were delisted from Nasdaq in 2018 because of the accounting issues, and back then their stock dropped by 60% because of those news. If you find this information interesting, please don't forget to press the like button and subscribe to our channel. It really helps the algorithm of YouTube to pick up our videos. By the way, as you realize, their accounting firm EY left them right in the middle of this storm, right in the middle of a time frame of 60 up to 180 days that they had to provide their 10K filing. And the important questions that I have are, how the hell they will find right now some accounting firm that will agree to take them on? And second of all, even if they will find such an accounting firm, how they will make this report on time if they have to start from the beginning? And the answer is simple. Probably they won't make it on time, especially if they really have some issues with the numbers. Basically, it could be nothing, but it very much could be something. We have a full video on our channel that came out straight after Hindenburg report, explaining everything of what Hindenburg are accusing SMCI. So after this video, if you're interested in that, I suggest you go and watch it. But a few spoilers: they don't only have problems with accounting. They have some very weird, shady dealings with the companies that are owned by brothers of SMCI's CEO. After the Russian invasion to Ukraine and all of the sanctions, Hindenburg claims that exports of SuperMicro's high-tech components to Russia have spiked 3 times, and that one of the biggest importers of SuperMicro products in Russia is a supplier to one of Russia's largest supercomputers at the one secret, now sanctioned research center. That importer, Niagara Computers, has received at least $46.3 million worth of SuperMicro products since the start of the Russia-Ukraine war. And of course, I must say a few words about Ernst & Young or EY dropping SMCI as a client. In their resignation letter, EY stated and pay attention to this because it sounds really bad for the company, that they could no longer rely on management's and the audit committee's representations and would no longer be associated with SuperMicro's financial statements. SuperMicro pushed back, making its disagreement with EY's choice heard. A special committee has since been set up to investigate, but the company hasn't yet concluded this review. And of course, this resignation of EY followed a report of Hindenburg that we already spoke about today. Another piece of news that came out September 27, according to Wall Street Journal, US Justice Department probes SuperMicro computer. The Wall Street Journal reported that the probe was at the early stage and that the prosecutor at a US attorney's office recently contacted people who may be holding relevant information. It doesn't mean that they will open a case against SMCI, but they're definitely moving in that direction. Another piece of bad news that we've got this Wednesday is that analysts at Needham suspended coverage on SuperMicro computer after the investment firm had previously given a buy rating to this company. Needham also sees a significant risk of SuperMicro defaulting on the company's term loan agreement with Bank of America, and they wrote that under these circumstances we are forced to suspend our rating on SuperMicro shares. Our previous financial model should no longer be relied upon. Wells Fargo now believes that SMCI will likely be unable to file its fiscal 2024 statements in time. This is what Wells Fargo analysts said in a note. We see the resignation of SMCI's independent auditor EY as materially decreasing the odds that SMCI will be able to file its 2024 financial statements on time as it moves to hire a new public accounting firm. We also got a note from Mizuho analysts saying that SMCI currently has a listing non-compliance letter from Nasdaq dated September 17. We believe this notice gives SMCI 60 days until November 16 to present a plan to return to compliance with Nasdaq requirements or face delisting, the second instance in the last 5 years. Following the EY resignation, we believe it increases the risk for SMCI of not filing the 10K or getting an auditor to file 10K plan while increasing the listing risks. So as you could understand, the news are pretty bad for SMCI, but still there are some analysts, there are some people that are staying bullish on this stock, and most of their positive arguments are coming in then to the numbers. So let's dive in and see what are those positive catalysts that could happen for SMCI. For the current quarter, SuperMicro was expected to post earnings of 73 cents per share, indicating a change of about 115% year over year, and as we can see, their earnings per share a year ago was 34 cents. Revenue estimates is $6.46 billion, and the good news is that in the previous quarter they've beat the revenue expectations drastically. Here you can see that they reported revenues of $5.31 billion, that was by 4.8 billion more than was expected. Judging by year-over-year inventory growth, we can hope that management of the company knows that demand for their products will grow, and these growing inventories are actually an indicator that the company and the management are getting ready to satisfy this demand. By the way, SMCI products include servers, workstations, storage systems, server components, networking devices, and server management software. So by this we can make a conclusion that they're a hardware company. For the companies like that, rapid growth in inventories can mean that the company isn't selling as much as they hope they will, and it basically could be an indicator for incoming trouble. But in our case, together with the fact that company started rapid growth in revenues, which actually caused the stock price to rise significantly in the beginning of this year, we can make a conclusion that growth in inventories could be a positive indicator. Here in their previous results is written that right now their gross margin of 11.2% versus 15.5% in the third quarter of fiscal year 2024 and 17% in the same quarter of last year. Falling gross margins for a hardware company that is experiencing a rapid growth could be both positive and negative indicators. For example, one of the reasons could be high competition. If their competitors like Dell and HP are pricing their products aggressively, smaller companies like SMCI could be forced to lower their prices to to grow or maintain market share. Another reason could be high price for production or supply chain due to high demands. Fast growth requires speeding up the production, and when the demand is too big, you are, as a company, trying to buy all of the materials and to bring all of the resources that you need to satisfy this demand. So as a result of this, you might be paying more for materials, logistics, or for example, supply chain management. Another reason that is very probable in SMCI's case is that they're trying to lower the prices, so they will bring aboard more and more clients that in the future will be dependent on their products. So there is a strong possibility that they're trying this land grab strategy for a short term, but they're aiming to bring higher returns later on when those customers buy some other products of theirs that have higher margins, for example, or when they simply make their prices go higher. So in general, falling gross margins aren't always a bad sign. It's an okay thing if management of the company, for example, could demonstrate or explain that this is part of their long-term strategy and that in the future they're aiming to earn much more. But of course, if the decline continues and we will see that management of the company doesn't do anything or does not have in their plans to do anything with this decline, it could indicate that the company can't handle this rapid growth that they're going through right now. So as we can see, most of the numbers look pretty okay, if we are trusting those numbers, of course, and they could actually indicate a strong growth in the future. But are those numbers real? I am no investigator and I don't have a magical ability to see the hidden, but I can most certainly say that the accusations from Hindenburg are very serious and very bad. Second of all, the management of the company had the worst possible reaction is to actually step up and to delay this 10K filing for God only knows how long. The fact that their accounting firm left them in the middle of all of this storm indicates that the probability for trouble is much higher than not. And in general, the upcoming elections are unstabilizing the situation not only in US but all over the world. So right now, the overall moods of investors are pretty unstable. So why am I saying this? In general, you could try and trade those swings. Probably if you're a day trader or a trader and you're ready to take the risks, it's okay. It even could be a great time for you to catch these uncertainties. But personally, for me, it's a gamble. And I wouldn't be going into SMCI right now. For those of you who don't know, we really liked this company. We actually bought their stocks right after we've made our first video on SMCI on our channel. And in general, before the report came out, we were very happy with our investment. But of course, right after the report came out, we sold completely our positions. We've had another video about this on our channel. And right now, we are really happy with the decision that we've made. And we have actually few reasons for this. So first of all, SMCI, as I already mentioned, they're continuing to sell to Russia. And for me and Vadim, it's actually a personal matter and we won't be involved in anything that is related to those terrorists. But we have actually other reason as well. If, for example, they wouldn't be selling to Russia, we completely lost trust in the management of the company. What if right now they're not only reviewing their numbers, but cooking them to cover the past frauds? And after EY dropped them, I would say that it's more than likely that they're trying to lie in their numbers. Another question, what will happen to the stock of the company if investors will find out that CEO is stealing? And again, it's more than likely that he is stealing because SMCI have some very shady deals with companies that are owned by CEO's brothers, and actually, those companies sell only to SMCI. So this is weird, right? His brothers are having some very weird companies that aren't selling to anyone except of SMCI. So the answer is simple. This stock has an endless downside and the amount of risk that can't justify any future expected cash flows. So as always, what to do with the stock of the company is completely on you. The numbers look pretty good, but are those numbers real? I guess only the future will tell. Thanks for being with me. If you found this information helpful, press a like button, subscribe to our channel. I'll see you in our channel next time. Happy investing!